Right, we are going to commence another session, that is ethics and values. So this is again outside the external auditing flow discussion that we have already done. So this is going to be an interesting session. It's not a very difficult, just to learn certain important principle which are applicable for auditors with regard to the ethics and values. And again, I'm highlighting this is not difficult, but only thing you need to know the theory or the logics behind this ethics and values and how it comes and what are the logics, what are the logics of those theories, right? Basically, so let me to take an approach into this ethics and values, how that comes. So we'll look at from the basic diagram what we have been discussing. So management prepare the financial statement and given to the shareholders, but the shareholder do not trust the management, so therefore shareholders comes and appoint a third party person called auditor. Look here, auditor, my management has prepared the finance statement, but I don't believe them, so therefore can you come and check this finance statement and give me a report, right? How this person has to work, or how this person has to give that report has been given on according to the Sri Lanka auditing standards. And who should be this person, if you can remember? So who should be this person has been given in Companies Act. Can you remember? This auditor can be a two type of auditors. The CA Sri Lanka members is the 99% of auditors in Sri Lanka. Another one called registered auditor. Right? Can you remember? Yes, section 157 of the Companies Act, which we discussed. Now, we are not going to discuss this auditing standard now. We are already completed. So what we are going to discuss here, the ethical practice of this, ethical practice of the auditor. What is this? Ethical practice of the auditor. What is that? Now I'll give you a few examples. Let's say you are the auditor of let's say Pizza Hut. If you are the auditor of the Pizza Hut, now you are an independent person, you are a third party person. At the end of the audit, the management say that you all have done a great job, your team has done a great job, so therefore we will be giving some pizza for you all for the dinner or the lunch. Can you take that pizza? Or let's say that you are auditor of Watch Jewelers. At the end of the audit, the managing director of the Watch Jewelers says that you are very good. Let's say you are a girl and you are a senior of the audit and you have done a very good job, and they are very happy and giving a pound de Kemale. Or let's say you are auditor of Strangila Hotel and they are happy about your audit service and what they are offering you is. So they are telling, so you can take your wedding at Strangila without any charge. How comes? So how difficult to take a wedding and this cost of living at a, even for a normal hotel, but to see that the Strangila is offering you to get at the free of charge. And these days is a holiday season, and let's say you are auditor of Cinnamon Hotels, and they are offering a 2 weeks stay out with your family in, let's say in Bentota or Zamya or Trincomalee, one of the Cinnamon Hotels with the full board free. Can we take this? Can we take this? Let's say you are an auditor of the Coca-Cola company in Sri Lanka, right? So Coca-Cola company in Sri Lanka say that the Coca-Cola, the most important thing is that mix. No one can copy that. Right? Even the My Cola came in, but they were unable to hold on to the market. So that mix is known by only few people in the business. Otherwise, everybody knows me, and then it will become a public mixture that then the business model cannot survive. So that mix is known by only very few people, and the auditors have access to get any or see any of the information of the company. So accordingly, auditor can see that also. Now let's say you are auditor of Coca-Cola company. After audit is over, someone from the My Cola company contact you and say, can I meet you? You say, okay, meet. And after meeting, he is telling, okay, we will be giving you a $2 million USD, and we will be giving you a house in Australia. You don't have to come back to Sri Lanka, and we will pay you a monthly salary of 2 million till you die. What we need, you have to give the mix of Coca-Cola that you identified to that you noticed during the audit. Can you? Now you are thinking whether if you are staying in Sri Lanka and if you are earning throughout your life, you will not be able to earn the $2 billion USD, maybe $2 billion USD. So in that case, what do you think? You think that the getting of that is better to get that offer. So whether can you do it? And sometimes when you go for the audit and when you are working at the client place, sometimes the management of the company will offer you, okay, look here, after audit is over, so you are in your audit firm, you are paid a very small salary of 10,000 rupees. So can you come and join that account executive? I will pay 50,000 you. This offer is given before the audit is completed. Now we are thinking whether to continue, whether to do this audit properly or to concentrate on my future job opportunity. Right? Likewise, there are many practical scenarios. There are many practical difficulties that the chartered accountant or the auditors are facing when they are carrying out the audit activities in this profession. Right? So therefore, what our discussion is all about today is to discuss about the not to discuss about the auditing standards. We know when we work according to the auditing standards, so we can work according to the auditing standard, but the society is not easy. Society is not comfortable to work like that. There will be a lot of challenges when you are working, when you are trying to work according to the rule, according to the standard. So the society will not allow you to work like that. So therefore, this particular person has to work or has to have ethical practices, ethical guideline issued by the CA Sri Lanka. CA Sri Lanka has issued some ethical guideline for this person to maintain the independency while he's acting as an auditor, or while he is working in the mercantile sector as a chartered accountant. So this CA Sri Lanka has given a booklet. That booklet is called Code of Ethics. Code of Ethics 2020, right? So this booklet you can download from CA Sri Lanka website. So what I'm trying to say here, this ethical practices is needed for a auditor. Because why? Because we are facing a lot of challenges, a lot of difficulties in terms of carrying out their professional activities as per the auditing standard. I told a few examples. Now at the year end, sometimes hampers are being received, year-end gift are sent by your clients. Client is sending a year-end gift. Whether can you take or not this one? All these are challenging things, and the difficult thing, how those things to be addressed is very clearly given in this booklet. Okay, when there is a problem like that, so we'll resolve that problem. So that is called Code of Ethics 2020, the ethical guideline issued by CA Sri Lanka for the auditors, especially the chartered accountant who are in practice. Right? Clear? So I hope that you are clear. Now we are going to learn on this session the CA Sri Lanka Code of Ethics, right? Some important guidelines, right? Some important guidelines are going to be discussed today. Now I hope that you have good understanding into how the ethics comes into the place, right? So the first thing that we need to learn, if you are clear about this background, the first thing what we have to learn is there are three principles which is behind this. One is called law, other one called morality, another one called ethics. What is the difference between the law, morality, and ethics? So law mean what? Now I'll give you a good example. If I want to kill someone, can I do? I can. But the problem is, if I kill someone, then I will be guilty, or I will be punished by I will be arrested by the police station, and I will be taken to the court and I will be punished. That is the law. So law means it is a mandatory to be applied to all the citizens in the country. It is by enforce. So it is enforced to be applied. So what the law does? The law sets minimum standard of living. So that means in the society, minimum standard of behavior, right? The law gives you a minimum standard of behavior. So you have to maintain it. So you have to wear the mask and go on the road. So the law sets a minimum stand, but law doesn't go beyond that. Law is by forcefully. So law by forcefully asks you to do it, but it is not a volunteer something. If you can violate, you will violate the law. That is why I told it sets minimum standard of behavior. Then there is something called morality. What is that? Morality sadachara. So morality means, now for example, let's say, can someone go on the road without clothes? Dresses natuwa paara yanna puluwanda? Can. There is no restriction for you to go on the road, as I know, I am not a lawyer, without dresses. But the problem is, if you go without dresses, what happens? Others won't accept it. Others won't accept it. It is not our culture. It is not our morality. Sadachara. Sometimes someone will say the war is not good. War is not good. Someone say war is good. The war is not good because of this. That is my personal belief. My personal belief on what is right and what is wrong, but that is not a law. So the morality means sadachara. The morality means personal belief on what is correct, what is wrong. Personal belief on what is right or what is wrong. Right? I'll tell you another example for the morality. Now let's say කාවහරි පොඩි එක්කෙනෙක් අම්මයි තාත්තයි ඇක්සිඩන්ට් එකක් වෙලා අම්මයි තාත්තයි දෙන්නම නැති වෙනවා මැරෙනවා. There was an accident and a small kid is there, both father and mother both died. Now no one to look after that small kid. The brothers of the father, තාත්තගේ සහෝදරයන්ට, is there any legal responsibility to take care of that guy? No. There is no law that, so you need to take care of that small kid who is your son of your brother who died recently. No, there is no legal requirement. But there is a morality that small kid should be looked after by the family people. If someone rejects it, okay, I would say that I'm the brother of that person who died, so I will say I can't take care of the kid. Can the law be forced to me? Cannot. So that is morality. Right? It is acceptable norm to the society, personal belief on what is right and what is wrong. Then ethics. That one, ethics. So ethics is, remember that ethics, I'll explain like this. So if you look at the law like this, if you look at the morality like this, ethics is a much wider concept. So ethics is a much wider concept. It goes beyond the law, it goes beyond the morality, and it goes beyond the self-conduct of a person. That is set of rules, set of rules. I would say that set of rules standards about how they should conduct themselves. So that means it's a self guideline. When there is an issue, so you have to maintain your ethical practices. So I have to be ethical. And there are some rules and guidelines given, but be using that rules and guidelines given, I should conduct myself, or I should behave in myself in a proper way. Right? I should behave, and I should behave based on the ethical practices, what is given in the guideline, and something beyond the guideline basis framework while the framework is applied. So ethics is a very large concept, wider concept than the law and morality. So ethics generally, so ethics you can see for even for individually for us, we have ethics. And organization, if you look at the companies, they have their own ethics, and professional bodies. So that means if you look at the lawyers association, if you look at the engineers association, if you look at the doctors association, they have their own ethics, individual ethics, organizational ethics, and the professional bodies. One of the example for professional ethics is CA Sri Lanka. CA Sri Lanka is a professional institution where the lot of members are there who are working as accountant as well as the auditors. So that is a professional body. All the members of CA Sri Lanka has been given a guideline by CA Sri Lanka to maintain the professional ethics, because ethics is needed, because being a professional accountant, there are a lot of challenges that we have to face in the day-to-day life. All those challenges can only be faced or can only be addressed through the guideline given by CA Sri Lanka as a code of ethics. A lot of problems are there. A lot of challenges are there. So how you maintain your independence, because independence is a very crucial fact. As we see in this diagram, you know, independence will give you a real independence is a real fact. If you are not independent, then you will not be able to give a proper audit opinion. So therefore, so independence is going to be a very crucial fact. For therefore, professional bodies have been issued their own professional ethics. Now, for example, for let's say, sometime you might have heard in the media, Madhya Achar Dharma. What is that? Is it a law? No, it's ethics. And sometimes it says that the lawyers, if you go to the lawyer's office, you can see the lawyer's office is all are putting a small board in the black and white. No digital name boards are there. If you have gone to an audit firm by chance, have you seen a very big boards for the audit firm? No. When the cricket match goes, have you seen any advertisement from the audit firm in Sri Lanka, KPMG, 20% discount, come and join with us? Have you seen? When you go on the road, there are a lot of big booths are there. I can see now this 120 road, 138 road in 38 in Colombo road, Colombo side. Big booths are there. Sunsilk, Lifebuoy. So big booths you can see. But have we seen anywhere an audit firm, auditor's name board is coming like that? Have we seen? No. Why? That is because of the professional ethics that they are maintaining. And you might have seen a lot of people in the media, a lot of people are coming in the media and talking with the economic crisis. And a lot of people are found guilty for certain offenses. But have you seen any auditor in Sri Lanka is coming to a media and talking, or they are going on jail? Have you seen? No. Because why? So we, everyone as auditors, we need to maintain the professional ethics. We can't work or we can't behave as we wish. So our behavior has been restricted or has been given using the set of rules and the standards by CA Sri Lanka. So therefore we have to maintain it. So that is why professional ethics are important for any person who is in the professional activities like auditing or accounting. Clear? So this is what the basic introduction to the law, morality, and the ethics, and the starting point for a code of ethics, which we are going to talk about. The CA Sri Lanka has issued a booklet called Code of Ethics 2020 latest version. So you can download from the CA Sri Lanka website. Right. If we first look at the first point that we have to learn is law, morality, and the ethics. The law sets a minimum standard of behavior. Morality, personal belief on what is right and what is wrong. Someone can think war is not good. Ethics, rules and standard about how people should conduct themselves. Ethics are a code of moral principle that people follow with respect what is right or wrong. Ethical principles are not necessarily enforced by law. Look at this. Although the law incorporate moral judgments, as finance professional, we will be forced with the problems it cannot be resolved by applying the reporting standard or a legal principle. So we cannot shout out all our problems which are faced in the professional life only through an auditing standard or not only through an accounting standard. So we have to apply the ethical principles depending on the cases to address and manage the situation. The CA Sri Lanka Code of Ethics for Professional Accountant provide ethical guidance for auditors. The Code of Ethics sets out 5 fundamental principles that we'll discuss later now. Right. So now, we learned the first one, law, morality, and the ethics, and how this is going to come. Now, number two I'm going to discuss is, so this code of ethics, what contains? Remember that, let's say you are management, prepare the finance statement and give it to the shareholders. The shareholder do not trust with the management, so therefore auditor is appointed to come and check this finance statement. So obviously, so this person is a professional accountant. So this person is a professional accountant. We'll say ACA, Associate Member of the Institute of Chartered Accountants of Sri Lanka. This professional accountant, how he should behave is given in this code of ethics. Number one, it says that this person should have 5 fundamental principles. Right? She should have 5 fundamental principles. So this particular accountant should have 5 fundamental principles. Moolika muladharma pahak තියෙනවනේ කියලා කියන මූලික සංකල්ප පහක් මේ පුද්ගලයා. Number 1, integrity. This person should have an integrity. So integrity means what? Integrity is not the honest. අපි අවංකයි කියලා කියන අවංකකම කියලා කියන්නේ integrity එක නෙවෙයි. අවංක භාවය කියලා කියන්නේ integrity. Integrity means what? Not only honest. So when you are dealing with the activities, you have to be honest, yes. Plus straightforward. So you have to have integrity. So integrity means honesty plus straightforwardness. So you have to be honest and also you have to be straightforward. So that means you have the integrity. Integrity is with you have. And number 2 say that number second principle that a chartered accountant should have is objectivity. So objectivity means what? So when you are working towards an objective, so you have to work towards that. Let's say now you are in a second year undergraduate. What would be your goal to complete your degree program with your first class or second upper? So that should be your objective. And you have to work towards that. But in most of the circumstances, what happened? Your intention, your objectivity is compromised in between or diverted in between due to various other commitments, the various other objectives or the various other limitations. Let's say you don't have money, you are financially weak and your parents also don't have money. So in that case, sometimes you may give up the degree and you may go for a job. Objectivity is compromised. Right? So similarly, this particular auditor, what is his objective? His objective is to come and check the finance statement prepared by the management and give a report. What is his objective? But while he is trying to do this, his objectivities could be compromised due to various reasons. Now, for example, let's say you are going to do the audit, and then your client says that, this management says that, okay, look here. So after audit is over, we will be recruiting you as a 100,000 salary. Right? Then what will happen? This person, audit senior, is always waiting to get that job. So therefore, he will never raise the problem that is not in the company. Clear? So that means then what will happen? His objective was to check this finance statement and give audit report. But finally, objectivity has compromised. Objectivity has been changed. Right? And sometimes, let's say, we'll think of a very basic example. Let's say you are an audit senior of an audit. You go for audit. Let's say you are going to audit of Brandex and one of the Brandex subsidiary company. And you go to the audit. Let's say you are a boy. And then you go for the audit there. And so you went to the audit, and accountant is a girl. And what happens after some time, both of you are getting closed, and both of you are going to have a relationship. Now, but the audit is not completed. Audit also going on. Now, later you found some mistakes of the accountant, who is your girlfriend. Will you highlight those issues to the management and the shareholders? No. Because if your personal relationship, objectivity is compromised. So integrity and objectivity is compromised. And then number 3. Another important thing, professional competence. Professional competence and due care. Professional competence and due care, what? So every chartered accountant should have the competence. Every accountant auditor should have a competence, ability. Now, let's say these days new accounting standards are being issued, or these days in Sri Lanka, there are some economic crisis, or there is some foreign currency issue. So every accountant should be aware of this thing, professional competence you have. And when the new accounting standard IFRS 17 is applicable in Sri Lanka from 2023. So every accountant should have a knowledge into that. And if your client come and ask some services to be provided, because why it's asked, you are an expert. So therefore your competence, professional competence, abilities, skills must be maintained. And the due care. So due care is another important fact that you know. The due care must be maintained by you. So the due care maintaining mean what? Due care maintaining mean what? So whenever you are trying to do something, you have to do it with adequate care. So if your office time, if the time is to come to the office is 8 o'clock, 8:30, if you come at 8:45, so you don't have the due care. The lecture start at 5 o'clock, you have to come at 5 o'clock. That is due care. Right? Whenever you are trying to do something in the client organization, so you have to do that is the adequate due care. And number 4 is a so crucial and important one, confidentiality. Remember that this particular person, the particular person mean auditor, what he gathers, he has the access to all information of the client base. He can get to know all the information of the client base, and all these informations are gathered part of the audit. Remember that this person cannot disclose. Remember that this person cannot disclose to a third party the information that you gathered during the audit. I told you the Coca-Cola example. So likewise, you will never be able to disclose such information that you gathered to obtain an advantage, competitive advantage, or an advantage to you or to a third party. You cannot disclose. Right? So now, but the thing is, the code of ethics says some exceptions. So that means, so there are 3 circumstances where you can disclose the information. Fundamental rule is, once you gather the information from the audit client, so you have to treat it as a confidential information. You will not be able to disclose such information. Right? But Code of Ethics has been given some exception where, so you can disclose some information to a certain level due to few reasons. One is, it is required by law. Just say, Gangodavilla magistrate has issued a notice to a KPMG audit firm to disclose some information with regard to the Sri Lankan Airlines audit. Can we go to the court and say, look here court, look here judge, we are a chartered accountants and according to the Code of Ethics, we cannot disclose this. No. Code of Ethics say, if it is required by law, law means it may be a court, it may be a government institution, like Sri Lanka Accounting and Auditing Standard Monitoring Board. Likewise, there are government institutions. If the government institution, custom, IRD, company register, maybe if the government institutions are calling the information, that has to be disclosed by the auditor. So there is no confidentiality requirement if the informations are requested by the government or the government institution under any law. Right? The second one, right? It is permitted by law. It is permitted by law and authorized by the client. What is that? Now, someone has come and asked some information from us, not the legal government bodies. Someone has come and asked some information. What we go and tell to the client, look here, client management. So, what are some of the information that we gathered? Your information have been requested this particular person. Can I disclose? If they say yes, authorized by the client. If they say yes, yes, you can disclose. Third one, even though it is not required by law, or even though it is not permitted by law. Third scenario, if the auditor believes that, he has a professional right or duty. If the accountant believes that disclosing such information is my professional right, or it is my professional responsibility to the society. So if I believe it, I can disclose the information. These are the three exceptions where the confidential information will have to be disclosed, and this will be tested in your examination sometime. So therefore, you need to be aware of this one, right? And here, remember, required by law means not only the court, but there are some other various government institutions. Right, number 5, professional behavior. So professional behavior means every accountant should behave professionally. Without bringing any disreputation to the profession. Accountancy profession should not be, or auditing profession should not be brought into a disreputation. So that is why now, for example, let's say now if a doctor does something wrong, and the blame comes from the society to the entire doctors in the country. Similarly, if the auditors does something wrong, even individual person, the reaction from the society will come to everyone in this field. So therefore, the CA Sri Lanka has positively told every members has to maintain the professional behavior. That is why the too much of marketing is not there. I can't do marketing now. Let's say Kristen, we can't do the marketing. Audit firm can't do marketing. Why? The audit firm can't say exaggerately. Anavashya lesa apita highlight karala apita marketing karanna bෑ. Why we can't do marketing? Because of the fifth fundamental principle, that is professional behavior. Right? The CA Sri Lanka has told that these are the 5 fundamental principles that must be maintained by every auditor and not only auditor. So these 5 fundamental principles must be maintained by 2 types of people. One is we call chartered accountant in practice. Other one we call chartered accountant in business. Chartered accountant in practice means audit firm. Chartered accountant in business mean all mercantile sector company people, like for example, finance controller, accountant, account executive, or maybe tax manager, something like that, who are working as an employees in the business organization. But the practice means this all both the type of people, audit firm as well as non-audit people, all these 5 fundamental principles must be maintained. Right? I hope that is clear. So let's look at it. The 5 fundamental principles: integrity, professional competence and integrity, objectivity, professional competence and due care, confidentiality. And the final one is the professional behavior. We see it to be straightforward and honest. Objectivity means not allow bias, conflict of interest and undue influence. This is examinable. And professional competence and due care to maintain professional knowledge and skill at the level required to ensure that client or employee receives a competent professional service. Skill must be there. And confidentiality, to respect the confidentiality of information required as a result of a professional and business relationship, and therefore not disclose any such information to a third party without proposed specific authority. And professional behavior, to comply with relevant laws and regulation to avoid any action that discredit the profession. Right? These are the 5 fundamental principles, and then we come to the confidentiality exception, what I explained you. Number 1, confidentiality requires members to refrain from disclosing information required in the course of professional work except authorized by the client, permitted by law and authorized by the client. It is required by the law, right? If you believe that is a professional duty and the right, if it is professional duty or a right. So these are the 3 circumstances where auditor can, where the accountant can disclose the information that you gathered as part of your professional activities. Otherwise, you cannot disclose the information which is gathered from the client to your benefit or even to the benefit to another party. So it is prohibited. And if you are going to work in another day into an audit firm, please remember that the information that you gather should not be disclosed even to your friends. It is not allowed as per the code of ethics. Where a member agrees to serve a client, member mean chartered accountant, agrees to serve a client in a professional capacity, both the member and the client should be aware that is in an implied term of the agreement that the member will not disclose the client affair. So this is an implied agreement, implied in agreement in the sense once you go for an audit, so we understand it. We understand, both the parties understand that we are impliedly agreed that we should not disclose to each other's information. Another one more thing called independency. Now I'm going to ask a question from you all. Now then we were talking about, listen to this carefully. So we were talking about this particular person's role. And we were telling this particular person's role is important. That is why the code of ethics have come into the place. What is most important here? His most important concept is what? Independence. So independence is the most important thing, but when you go and look at the 5 fundamental principles, independence is not there. When you go and see the 5 fundamental principles, independence is not there. Why? Why? Remember that independence is not a fundamental principle which is applicable for both the chartered accountants in business as well as practice. So independence is not a fundamental principle, but independence is a principle. It is a principle that is applicable for that is only applicable for audit firm partners, audit firm managers, people who are working in the practicing. Right? So therefore now you will understand why independence I have not taken into the 5 fundamental principles, because independence is applicable the audit firm, chartered accountant in practice. Independence is a principle that a chartered accountant should maintain, especially a chartered accountant in practice. Independent has 2 aspects. One is independent in mind and independent in appearance. What is that? Independence in mind means, so you have to be independent from the mind itself. You should not take anything that is given by the client. So your mind should be maintained. You have to be independent. And ideally, your decision making of the audit should not be influenced by anything. Independence in mind. But what is meant by independence in appearance? What is that? Independence in appearance. What is that? Independence in appearance means, now let's say you are auditor of Strangila. In these holidays, these holidays. So after audit is over, you go to Hambang, you go to, you say that you are auditor of Cinnamon Lakeside, Colombo. And after audit is over, you go for a trip to Hambantara Strangila. Right? Unfortunately, the CFO of Cinnamon Lakeside, Colombo also has come on a trip to Hambantara Strangila. Now, both of you are very know, and both of you are meeting at the restaurant. While both of you are talking, finance manager of Strangila is looking at this situation. So Cinnamon Brand financial control and Cinnamon Brand auditor, Cinnamon Lakeside auditor and Cinnamon Lakeside CFO, both have come on a trip. Maybe Cinnamon Brand finance controller may be sponsoring or incurring the expenses for the auditor to the auditor. Sometime this may be one of something which they have given, just because of doing something in favor of the company during the audit. See, sometimes your mind may not be there, but even though your mind may not be there sometime in appearance, in outsiders also we should behave like independent. Or sometimes there are girls and boys and they are very good friends. But even though that two don't have any relationship other than the friendship, but external parties will look at girlfriend and boyfriend. What is that? Independence in mind is not enough. Independence in appearance. Outsiders also should recognize you are as an independent person. So therefore, when you are working in an audit firm, auditor should be independent of mind, not only that, independence in appearance. Independence is a principle. Independence of mind is that the state of mind and that permits the provision of an opinion without being affected by influences that compromise professional judgment, allowing an individual to act integrity and exercise objectivity and professional skepticism. Independence in appearance is the avoidance of facts and circumstances that are so significant that a reasonable and informed third party having knowledge of relevant all information, including safeguard applied, would reasonably conclude that a member of the assurance team, integrity, objectivity, or professional skepticism have been compromised. So now these definitions or reading from the code of ethics you won't understand here. But what I'm trying to say is independence in my mean you have to be manasing swadhina wenna one. Penuwen swadhina wenna. Again, I'm telling you, remember, independence is not a fundamental principle, but independence is a principle that should be adopted by a chartered accountant in public practice. That means like audit firm, partners, managers. Right, let's start with the number 3. Give me 1 second. Right. So let's look at the part 3. So part 3 is the threats to fundamental principle, what it is that. So basically, now I told you this particular accountant has to maintain 5 fundamental principles, right? Similarly, this accountant so now this accountant, while he is trying to maintain the 5 fundamental principles, he has to suffer with, he has to face to some threats. What is that? Now I'll tell you a very good example to you all. Let's say that so you after your degrees completed, and while you are doing the jobs and now you get fed up everything and you feel that, so why should I struggle like this? And I start with the cultivation. So and you go back to Monaragala and Nathimale and you start a vegetable cultivation, something. Tanamalila cultivation, vegetable cultivation, you start with that. So you start with the cultivation. That what will happen there now when you go there, you will start with the preparation of the land and you will put your the seeds and all that is in fertilizer and everything in a proper way, and then you start your cultivation. You did, let's say, 2 acres cultivation of something, let's say maize, and what happens after some time, maybe after that is grown to a certain level, you have to safeguard the cultivation. There are a lot of threats. There are a lot of threats. Now you want to safeguard the threat, safeguard the cultivation from the lot of threats. What type of threats will be there? Wild elephant threats. Maybe some other diseases can be there. So we'll take a wild elephant threat. Now, while you try to maintain the quality of your cultivation, external environment is not allowing you to maintain as you wish. External environment is not allowing you to maintain as you wish, right? So external environment, since the external environment is not allowing you external environment threats you in maintaining your cultivation. Good example, wild elephant. Similarly, when this chartered accountant has maintained a 5 fundamental principle, so when he is trying to maintain the 5 fundamental principle, remember that it is not easy because threats are coming. Threats are coming. Even though this accountant has tried to maintain the fundamental principle, even though this chartered accountant or this accountant or auditor is try to maintain the fundamental principle, lot of external threats are coming. Lot of threats are coming which cannot be maintained. Threats are coming. Threats. Even though you try to maintain the professional fundamental principle, the external society will not allow you to maintain. Some good example I told you, when you went to the audit of John Keel's Holding, you didn't have a girlfriend, but when you went there to the audit, the accountant became your girlfriend. Is this a threat? The threat created in the environment, you never expected that. It's a threat created in the environment, right? And when you went to the audit, you never expected something from the client. Client as of you went to the audit of the Toyota company. At the end of the audit, so you are given a Toyota car. Now threat has come. Now your mind is diverted. So similarly, when you are working as an accountant in this society, even though you want to maintain a 5 fundamental principle, it is not easy. අපි සාමාන්‍යයෙන් කියන්නේ අර පන්සිල් රකින්න අපි ගොඩක් අය උත්සාහ කරනවා. අපි කොච්චර රකින්න උත්සාහ කරද්දී අපි will take a good example for boy. Now, so boy has one principle, he will never drink. He will never drinks. Right? කවදාකවත් liquor ගන්නෙ නැහැ කියලා හිතන් ඉන්න boy කෙනෙක් will say. That can be maintained, no? There is no issue. But to explain this one. Now, once you come to the university after the semester is over and you all maybe with the friends and all you meet after the semester is over and all meet at maybe at somewhere inside the university or outside the university and all will get the drinks or liquor, let's say. Now, even though you try to maintain your principle, there is a threat now. The friends are telling you to take the liquor. Similarly, every accountant also, even though they try to maintain the 5 fundamental principles what we discussed, integrity, objectivity, professional competence and due care, confidentiality and the professional behavior. Even though we try to maintain these 5 fundamental principles, there are a lot of threats, challenges, limitations that are arising from the society. So those are called as threats. Right? Basically, in theoretically, there are 5 threats. Right? One is self-interest, self-review, right? Familiarity, would say advocacy, and intimidation. So there are 5 fundamental principles, as well as there are 5 threats that would arise for accountant while he works as an accountant. What we talk about the self-interest. The self-interest is like this. Now, you know, management prepare the financial statement and giving to the shareholders, but the shareholders do not trust the management, so therefore shareholders comes and appoint a third-party person called auditor. This auditor has to go and verify this financial statement and give a report. That is the objectivity of the auditor. While he is doing that, this particular person, while he is doing that task, let's say, so this management has given him a gift. Now management has given him a gift, or management has given some bribes, Allahs. And you also don't have money, management will come and say, so you have found a 5 million statement. Don't report it, we will give you 20 million rupees. Report. Now, auditor also thinking, now auditor is constructing the house, his house. He doesn't have money these days. Now he see a good opportunity, whether to get this 20 million. Oh, one option is getting a 20 million. Oh, the second option is maintaining the objectivity of the auditing. Objectivity of the audit is what? To express an opinion to the shareholders on the finance statement, whether such finance statement contain material misstatements or not. What happens now? My mind is working either 20 million or a audit objective. So that is, so this 20 million has created what? Self-interest. Rather I go on my objectivity. Rather I go on my objectivity. There is a threat to think about myself now. There is a trend to think about myself than the audit objective of 20 million. Second objective, let's say this auditor has been given the offer of the job of the management in later. Rather you think about the audit objective, now I am thinking about what? My future job opportunity. What is that? It is a self-interest or a financial or non-financial benefit. In order to get the financial and non-financial benefit, if I divert my objectivity, that is called as a self-interest. Self-interest. Swang alma. Tamangana tina almak nisa. Vigarane tina aramunan api paribahira venu. That is a threat to maintain the objectivity of the auditor. Right? Self-interest. And the second one is a self-review. What is meant by self-review? The self-review mean like this. Self-review mean what? Right. The self-review mean, so this particular chartered accountant, or this is an auditor, audit firm, let's say KPMG. Right. So now this management comes and tell you to the auditor, ane ape accountant resign vela ape accounts tika hadala dennuku, audit karanna kalin ape accounts tika hadala dennuku, can you all prepare our accounts? After that you can do the audit, because our accountant is not there, accountant has gone on maternity leave. Can you do it? Audit firm also in the business, audit firm will say, okay, give us 100,000, we will do it. Now, if the audit firm is going to prepare the finance statement of the company, listen to this carefully. If the audit firm is going to prepare the finance statement of the company, another day he is going to review the finance statement as an auditor, then what is going to review? He is going to review what? The work or the finance statements done by the auditor himself. Again, auditor visinma nirmane natham pilila karana da moola prakashana kattalaya auditor visinna pariksha karanawa. Etakota independent there. Is he independent? No. Self-review. So self-review means KPMG himself reviewing the work of the KPMG and giving an opinion is how far it is independent, how far it is correct. It is not correct. Clear? So I hope that you got some understanding to the self-review. And the familiarity. As you are aware now in this your course, now this is my so we are meeting on a press time. I'm meeting you all on press time. And if this is not a physical lectures, but it's a virtual lectures, but if you have been a physical lecture, just say, so about 13 weeks, we are going to meet, 13 days, we are going to meet at the Fayol or some other hall in the university. And every day when we meet, very first day, I don't know any one of you, and you also don't know me. And after very first day, second day, and every one of you know me, and I also know some of you because I can see the faces of the lecture hall. When it comes to 13 weeks, definitely I know most of your names because I may be talking to you all at the physical lecture, and I know most of you. And if I meet you outside some other university, let's say Vijayarama Junction, you will definitely recognize me, and I also will recognize you. What is that? What is that? So we have built up what over the period of time, a familiarity. Suhadashilit. Familiarity is a good concept because You can do a lot of things under the familiar environment, but remember, familiarity is not good for the auditors. When you talk about the police station, you know, in Sri Lankan police station, police officers are changed. Police officers are changing the same. Police officers are transferred in a regular intervals. Why? When they get too much of familiar, they cannot work independently. Therefore, this auditor also gets too much of familiar with the management. Let's say, I am the auditor of 2000. Let's say I'm the auditor of 2021-22. I'm the auditor for 22-23, 23-24, 24-25, 25-26. I'm the auditor for all these years. What will happen? Day by day, my familiarity goes up and I will get friendly with the client and client will become my friend. What will happen? And when you are too much of familiar, you will never be able to certain things to go against them. අපිත් එක්ක ස්වහදශීලීත්වය වැඩි වෙන්න අපි එයාලට විරුද්ධව වැඩ කරන්න තියෙන. එයාලට නැත්නම් අවාසියක් වෙන තැන්වලදී එයාලගේ පැත්තට වැඩ කරන්න තියෙන chance එක වැඩි. So familiarity is like that. When the audit firm and when the audit firms and the company has so long association, the familiarity threat arising, and end of the day, then the audit objective, so your familiarity, your friendship will work than the identifying the material statement and reporting to the shareholders. Right? That is called familiarity. Then the advocacy is a bit of a difficult thing for you all to understand, but I'll explain you all. What is that? What is that? What is that? What is that advocacy? So advocacy threat mean now something like this. අපි මේකට කියන උපදේශාත්මක තර්ජනය කියලා. උපදේශාත්මක තර්ජනය. Advocacy threat mean now sometime let's say this KPMG auditor and this is let's say Navalok Hospital PLC company. We come to the outside media. We tell that Navaloka Hospital is a very good company. Please invest there. You can go and invest there. You can buy the shares of the Navaloka Hospital because that is a very good company, high performing company. We tell to the public that is a high performing company. You can buy the shares of this Navalok Hospital PLC. Now what I did, I promoted my client shares. So when I promote my client shares, and if I go and tell to the public that you buy this particular person shares, then another day, if something goes wrong, if the company performance comes down, then I have to maintain the statement that I made. So if I am to maintain the statement that I made, I may have to go out from the auditor's objectivity. Sometimes I may have to overstate the financial statements. Right? So that means, so advocacy, upadeshatmaka mean one is promoting client. Promoting client mean your client is advocating. Advocacy threat is coming. And also advocate කිව්වහම අපි අහලා ඇති සමහරලාට advocate කියලා කියනවා lawyer. Second scenario, this particular company has a legal case, let's say in the Colombo High Court, and they don't have a lawyer. Audit firm has a lawyer. This lawyer, audit firm lawyer is appearing on behalf of the client at the court. If the audit firm is appearing on behalf of the client at the court or any other government representation, what will happen? We are appearing on behalf of our client. Are we independent? No. We may be doing for a fee. We are not doing a charitable work, so we are doing for a fee. But still, that is not good because it impacts the independency. So promoting client as well as appearing on behalf of the client, both are coming under advocacy. Right, we are coming to the last one, intimidation. Intimidation, we again mean. So intimidation mean what? Now let's say you are the auditor of this particular company of Navalok Hospital PLC, and you have found 100 million fraud that made by accountant, and you have found today, and now let's say you are from Avisavela. Now after audit is over, you go back to your home Avisavela, somewhere in between, in somewhere in Kosgam area, and one white van comes, Sudu van nakkenawa, or bassagin bassara arayano arangilla pistol එකක් තියලා කියනවා ඔළුවට මේ ෆයිනාන්ස් ස්ටේට්මන්ට් එරර් එක ඩිස්ක්ලෝස් කරොත් හෙට මරනවා. If you disclose the misstatement that you identified, you will be killed by tomorrow. Therefore, if you have an interest to your life, don't disclose this. Now don't get scared for the auditing. That type of event has never happened in Sri Lanka. Never happened in so many history. But if that is the case, now you are thinking whether the finance statement objective was stating that the finance statements are free from material misstatement, or your life is important. So therefore, there is a threat of intimidation, of diverting your objectivity. Another example for intimidating, let's say your client is paying a very high fee for you, and client will tell you, we will change the audit. Intimidate. We will change the audit if you don't do this. If the audit is changed, so you are losing the revenue, audit firm is losing the income. So intimidating. So therefore, that is called intimidation. That's the brief introduction into the self-interest, self-review, familiarity, advocacy, and intimidation. Let's look at the note now. Right, so there are 5 self-interest, review, advocacy, familiarity, and intimidation. Self-interest threat. A self-interest threat is the threat that the financial or non-financial, financial or other interest will inappropriately influence the professional accountant's judgment or behavior. Self-interest threat may arise as a result of the financial or other interest or immediate close family. Not only the accountant member ACA, but sometimes this interest will be taken out by the immediate family member. You are, let's say, your father, mother, sisters, brothers, or your husband, wife after you are married. Right. So example, financial interest, we will discuss this practical application in the down and close. So all this will be discussed in the down, right? Practical example. Then the self-review threat self-review threat arises when a member reviews their own work or advice as part of an assurance engagement. Circumstances that may arise such threat include the following: recent service assurance client, tax service in audit. So that is there in the down, we'll discuss it, right? Advocacy threat. Advocacy threats arise in those situations where the audit firm promotes a position or opinion to the point that subsequently objectivity is compromised. Commenting publicly. I told you, commenting publicly. Acting as an advocate, promoting shares, all 3 are advocacy. And familiarity threat, important one. Familiarity threat. Having an audit client for a long period of time may create. So if your audit client for a long time, you are the auditor of the company for a long time, So that long time may create a familiarity threat to independence. The severity of the threat depends on the factors such as how long the individual, how senior the person, whether the client management has changed, whether the client accounting should just not to think about too much, what the level of impact depend on these factors. Possible safeguard include, we'll discuss that is at the finally, that no, not to look at now. I have not come into that. I'll explain that is later. Now, remember this thing. This is a special rule and it is it's a brand new law, brand new regulation, which you are going to learn. Actually, this is something introduced in this year, the last year. And even professional examination students may not be learning still yet, but you are learning first. What is that? This is something like this. Listen to this one. Now in the management, prepare the finance statement and give it to the shareholders. But the shareholders do not trust the management, so therefore shareholder appoint a third-party person called auditor to come and check this finance statement and give a report. Right? Yes. Now, this audit mean in the audit team, generally there is an audit partner. Right? And there can be an audit manager. There can be audit supervisor. There can be audit senior. And the associates, other trainees will be there in the audit firm. So this person job role is very much important, audit partner. We call engagement partner. We call engagement partner. Right? This engagement partner, first thing that you need to learn, there is no restriction. Now let's say Navaloka Hospital PLC, audited by KPMG. KPMG can become the auditor of this company forever. There is no restriction as per the Code of Ethics. KPMG can become the auditor of Navaloka Hospital PLC for Hamadama. KPMG can audit firm auditor vela inna pulan ඕනම අවුරුදු ගන්න. But remember that. Remember what I am telling now. But this particular person of the KPMG with regard to Navaloka Hospital PLC, let's say my name, Vipula Bandara. Vipula Bandara is the partner of Navaloka Hospital PLC. He can only be a partner of this audit only up to maximum 7 years. Remember that. I can only be a partner of this audit only up to maximum 7 years. After that, after 7 years, next 5 years, I can't be the partner of this audit. But after 5 years, if necessary, I can be a partner again. Clear? I'm telling again. KPMG, one of the partner is the partner of this audit. He can only be the partner of this particular audit only up to 7 years. Next 5 years, after 7 into next 5 years, he can't do anything with this client. That is what it says here. Individual in an engagement, the engagement partner maximum service is 7 years. Cooling off period, 5 years. Cooling off means he can't do anything with regard to that client during that period, 5 years. And there is another 2 people, but you are not very thoroughly known that area, but I'll just tell you that, not required to be remembered, but this one has to be remembered. Engagement quality control partner. In this audit, there is someone called quality control partner. That means to ensure that whether the quality has been done in this audit, there is a person called quality control partner. That quality control partner or reviewer can work. He's also 7 years, but cooling off is 3 years. And there can be some other key audit partner. There can be another 1 partner, consultant partner, someone engaged here. He's also 7 years plus 2 years. But most important role is the engagement partner. Remember that this cooling off period are applicable from the financial period from 2025, this new law only you have to learn. This is applicable from 2025. But at the moment, law is this 7 years plus 2 years. But that is at the moment law, but forget about that, the moment law. So you have to learn the new law. Right? Clear? Right. So this will be tested in the exam, this cooling off period. So during the cooling off period, they cannot be on the audit team and cannot consult with the audit team or the client or any issue that may affect the engagement. The code does allow some flexibility here. If the key partner continued to be particularly beneficial to audit quality and there is some unforeseen circumstances, the key audit partner may remain on the audit team up to 1 additional year. අර හතක් කියන එක තව එකක් එකතු කරගන්න පුළුවන් maximum 1 year. How? Let's say there is no other partner to take over this responsibility or engagement or partner who was the partner who was expecting to become the engagement partner has become a serious like a next innovative partner. Then in that type of situation, you can go another 1 more year. That's it. Right. Then next one, intimidation threat. An intimidation threat arises when members of the audit team may be deterred from acting objectively by threats actual or perceived. These could arise from the family or personal relationship, litigation, or close relationship. These are some examples of self-interest threat, largely because intimidation may only arise significantly when the audit firm has something to lose. Example is when the client threatened to sue, or does sue or the audit firm work that has been already done previously. The firm is then faced with the risk of losing the client, bad publicity, and the possibility that it will be found to have been negligent. This could lead to the firm being under pressure to produce an unmodified audit report in the auditor's report. The following safeguard will be applicable. We'll discuss at the finally. However, if the litigation is at all serious, it may be necessary to resign from the engagement as the threat to independent may be too great. All right. So we come to the next principle, reducing the ethical threat, something called safeguard. What is that? We'll go now. What is meant by safeguard? Now, this particular chartered accountant or a member, accountant or auditor, when he tries to maintain the 5 fundamental principles, as we discussed, a lot of threats are coming. Right? Threats are coming. Now, just because of threats are coming, should we give up this work and just stay at home? Now, let's say you have started your cultivation in Monaragala, Atimale, you have started on cultivation. Suddenly, wild elephant comes in and they try to destroy your cultivation. අනේ කමක් නැහැ වල්වලින්ට ඔන්න ඔය කන්න දාලා ආපහු අකුලගෙන ගෙදර එනවද? එහෙම වල්වලින්ට මොක දීලා එනවද? Are you going to give up to the wild elephant to your cultivation and come back home? No. Just because of threats are there, that doesn't mean that we are going to give up our cultivation. We try to put some safeguards. ආරක්ෂිත ක්‍රියාමාර්ග ගන්නවා. ආරක්ෂිත ක්‍රියාමාර්ග ගන්නවා. So we are trying to get some safeguards. Right? What the safeguard that you can take? What the safeguard that you can take to cultivate your maize, to safeguard your cultivation? මොකද්ද වල්ලලින්ගෙන් ඕක ආරක්ෂා කරගන්න මොකද්ද කරන්න පුළුවන්? Elephant fence එකක් ගහන්න පුළුවන් අලි වැටක්. එහෙම නැත්නම් අර පඹය 3-4 දෙනෙක් හදලා තියන්න පුළුවන්. පඹයන්ට අලි බය වෙන්නේ නැහැ. එහෙම නැත්නම් රැයට ගිහිල්ලා අර ගහක් උඩ පැලක් හදාගෙන ඒ පැලේ ඉඳන් අලි එලවන්න. Likewise, there are several mechanisms, there were several methods, several safeguard mechanisms are available if you really do and you try to do it. Similarly, a member or the auditor or accountant, when there are some threats, we are not going to give up the work. Easiest thing is to give up the audit. Easiest thing is to give up the audit, but we never, that is our last option. We never go for the last option as the first option. So therefore what we do? So what we do is we try to apply something called safeguard. So we try to apply the safeguard for what? To protect the fundamental principle from the threat that are arising. Right? So the safeguards are being given in the Code of Ethics booklet and stating that when there are some practical difficulties, practical threat that you face in your professional career, if you face those issues, so what you can do, so you can safeguard yourself. Try to manage through the safeguard. If not, if you cannot maintain only, you should resign from the work or you should give up the work, right? Or if the risk is too high only, you should come out. Now, when the threats are coming, certain threats are very significant that you can't apply the safeguard. Can you safeguard? You can't do it. So in that case, you may have to give up your cultivation. So similarly, accountant also sometimes when the threat is so significant, no safeguards are available. But if the threat is not that significant, there are certain safeguards applied and still continue in the engagement. Right? So therefore now, for example, let's say one of the example I'm going to tell you for the safeguard. Let's say in this basic diagram, this auditor, right? So let's say this audit firm, this management is asking you to, can you do our tax computation? Right. Management is asking you to do the income tax computation of the management is asking you to do the tax computation of the client. Right. Now what will happen? Audit firm will say okay. Right? They will do the tax computation and they will give it back to management. Now what will happen? Another day, so you are going to check this finance statement. In this finance statement, there is something called tax provision. In this finance statement, there is something called tax provision. Now what is happening? The tax figure who is computed by the audit firm has been put into the finance statement. Now audit firm is going to check this tax provision. Who did it? Auditor himself previously. Management tax computation computation finance statement accounts tax provision. එක ගිහියාට පස්සේ අපි දැන් ඔඩිට් එකට ගියාම අපි ඔක චෙක් කරන්න ඕනේ. දැන් චෙක් කරන්න වෙන්නේ මොකද්ද? අපිම හදපු එකනේ. ඒතර අපිම හදපු එක අපිම චෙක් කරනවා නම් මොකක්ද දෙන්නේ? What is that? Sorry. So if we are doing what we did, self-review is coming. When there is a self-review threat, immediate solution will be either to give up the tax or either give up the audit. One of them only can be done. No. So what auditors do, they assess the impact. Assess the impact and see whether safeguards are available or not. The safeguards are available or not. If no, only you are going to give up. If yes, we'll apply the safeguard. So if yes, what are the safeguards available? One of the safeguard is tax compute under the KPMG audit, under the KPMG itself, tax computation can be done by team 1. Audit can be done by team 2. Two different people are involved for both the work. Then the risk for the objectivity is minimized. Even though the same firm does it, two different teams who have no interconnection, we call Chinese wall. China Maha Prakare wage දානවා කියලා අපි කියන්නේ මේ team දෙක අතර. කිසිම සම්බන්ධයක් නැහැ. China Maha Prakare, Chinese wall. That is a safeguard. You understand what the safeguard means. Another safeguard is, another example is, let's say, this audit firm in the audit, this manager is working for this audit for 10 years. There is no legal restriction. This manager is working for 10 years in this audit. So you can rotate the person for next year. You can change another manager. When you change them, when you change the person, familiarity threat is managed. Those are called safeguards. Right? Clear? Right. Okay. Let's look at the theory side. The ethical code outline appropriate safeguard that must be put in place to eliminate or reduce such threat to acceptable level. There are two general categories of ethical safeguard identified in the guidance for accountant in practice. There are two types of theory safeguard. One is safeguard created by the professional legislation and regulation and the assurance client. So that means there are common safeguard applicable for the entire industry, and there are some safeguard applicable for each and every work. That's the difference between these two. As an industry, as a whole, there are different safeguards available: education and training and experience, continuous professional development training. CPD. So we need to develop ourselves. We need to develop ourselves the knowledge that will ensure that will be treated as a safeguard. Corporate governance regulation will be better. Professional standard is good, and professional or regulatory monitoring and disciplinary procedures. So these are, as an industry, applicable for all the audit firm. And there are certain things which can be applied by the firm to firm. One example, these are, you have to remember these things. Quality control policies is one of the safeguards that can be applied. Right? Rotating the senior personnel, changing the person from the year to year will be another good safeguard. Right? And another one, this is another example one. We bring third-party person to review the work that we have done. That is another good safeguard. And disciplinary measure is another good safeguard. So these safeguards are very important and examinable. So this can be applied on many circumstances. Quality control, number one, can be applied. And rotating the people can be applied. And involving an additional professional accountant to review the work can be applied, right? So this is an examinable, so you should remember it. Now, this safeguard, this is a theory, but depending on the case, safeguard will be different case to case. Right? So it will be different case to case. And sometimes the practical safeguards are not available in the Code of Ethics booklet. In some time, we may have to think and apply the safeguard for the depending on the circumstances. Right? And when I was explaining something in below, above, I told that, see, when there is a familiarity threat, possible safeguard would be rotating the senior personnel, correct? Change the personnel, then safeguard, then the familiarity comes down. Having a professional accountant who is not a member audit team to review the work, check regular, independent, external quality control reviews. Right, here also we told the following safeguard for intimidation: disclose into the audit committee. You can disclosed to the audit committee of the intermediation, removing the specific affected individuals, involving additional accountant on the team to review the work. So likewise, safeguards are depending on the case. In your and this stage of your subject is concerned, not to worry about too much on the safeguard, right? So I'm going to tell you another one more thing before coming to the practical application. Now, remember that ethical issues, how to resolve. Ethical issues. When there is ethical issue, how to resolve for a chartered accountant or auditor, let's say auditor, has the ethical issue. Number one, he needs to evaluate the threat. Evaluate the threats. So you need to evaluate the threats. What is the threats available for this situation? In this situation, what the creating threats? That is number one. Number two, what is the fundamental principles affected? First of all, identify the threats. The second one, identify the fundamental principle affected from this threat. Threat එක identify කරන්න. මේකෙන් fundamental principles වලට බලපාන්නේ තියෙන්නේ මොකක්ද කියලා identify කරන්න. Number 3, see whether safeguards are available. This is very crucial. Number 3, you need to see whether actually safeguards are available or not. There are certain things, there are no safeguards. And number 4, if yes, implement it. Right. Number 5, if no, right, withdraw. So that means come out, resign and come out. So this is the 5-step of ethical resolution model. So when you are trying to resolve an ethical issue as an accountant, these 5 steps must be adopted. What is that? Identify the threat, identify the fundamental principles affected, see whether safeguards are available or not. If yes, implement the safeguard. If no, come out from there. Right? Right. So with that, we are concluding the theoretical side of the Code of Ethics discussion. Now we have to quickly look at the few of the practical applications. Few of the practical application is not a difficult area since we have already discussed now. We'll take a small break of 5 minutes, and after that we'll continue in this area. Right, let's continue the remaining part. So remaining part is the practical application of safeguard, just to give you a practical few example for you all to have a good understanding into that. So basically, this financial interest, few example we are going to discuss under the self-interest rate. So financial interest. Financial interest mean what? Look at here. Now, basic diagram, management prepare the finance statement and give it to the shareholder. And the shareholder comes and appoint an auditor. Right? That is our basic diagram. So in our basic diagram, financial interest mean, right? Let's say this audit firm is also one of the shareholder. Audit firm, in addition to the carry out the audit of financial statement, audit firm is also one of the shareholder. What will happen now? Now, one objective is verifying the finance statement and giving an opinion. The second objective is what? The share price. You have to maintain the share price. So therefore, auditor will not do anything to reduce the share price. They will overstate the finance statement to get a higher share price. Clear? So that means one is this subjective. This is a self-interest. So self-interest is coming. So in this type of situation, what you could do, either maybe audit firm, partner of an audit firm, family of an audit firm, member, anyone. So there's self-interest. You have to see the impact and you have to give up this interest. Right? You have to give up this interest. So this is something, a financial interest exists when an audit firm has a financial interest in a client affairs. Example, audit firm wants shares in the client, shareholder, shares in the client. The Sri Lanka Code does not allow to own direct financial interest or indirect material financial interest. It's not allowing, right? Not allowing. So the safeguard is what? So you have to dispose the interest, either dispose the interest or remove that person from the audit firm. If the audit firm owned or can't tell, but I'm telling about if the one individual has a shares, then we can remove that person. Right? Then if the close family relationship mean like this. So very good. This is an examinable one. Another one. Close family relationship mean what? So like this. Right? Management. And then prepare the finance statement and giving close business relationship. Sorry. The shareholders and the shareholder appoint a third party person called auditor. Right? So this audit firm, in addition to carrying out this finance statement audit, so they do one business with this client. So they have started the new business called, right? They have started a new business, printers. Right? What will happen now? Audit firm and client, they have a business relationship. And in the meantime, you do the audit also. That is not possible. What it's trying to say is the board, two objectives or two matters cannot be done. Two things cannot be done by the audit. So it's not possible. Right? So if it's a material and significant, so it has to be removed out. And sometimes audit firm is acting as a distributor of the management, something like that, any business work. So in addition, now finally what the purpose here is, this person has to be an independent person. That's the goal. So going to that goal, this business, doing business mean all are blocking the independence of the audit firm, auditor. The close business relationship between a firm or audit team member or the member of the individual immediate family member. So when you talk about the audit firm, we are talking three things: audit firm and member of audit firm or close family member. Close family member of audit team member. That means audit partner's wife, audit partner's son, likewise. Example, having financial interest in a joint with either client or a controlling or a direct officer who individually who perform a senior managerial activity. So this example, don't worry about too much. These are there in the code of ethics. But what you need to understand here is they can't do the business with the client. It may be a joint venture. It may be here it says something like arrangement to combine one or more service or product of the firm, distribution or marketing arrangement. Any business activities are not allowed. Right? it will be necessary for the partners to judge the materiality for the interest and therefore it's significant. However, unless the interest is clearly insignificant, an auditor provider should not particularly participate in such ventures. So that means if this business is like a normal way material thing, it can be done. If it is a very significant, it is not allowed to be done. Right. And also another two lines are there. If an individual member of an audit team has such an interest, he should be removed from the audit team. If the business relationship is between an immediate family member or member of the audit team and the audit client or an arrangement, the significance of any threat must be evaluated and safeguard applied when necessary. Generally speaking, purchasing goods and services from an audit client at arm's length basis does not constitute a threat to independence. Now, I am the auditor of Navalok Hospital PLC. I go to get the medicine from Navalok Hospital PLC at a normal, like a normal patient. There is no threat to independence. Code of ethics unreasonable. That is always look at the intention behind that the dealing, intention behind the dealing. Right. So generally speaking, the purchasing goods and services are not. So now let's say I'm the auditor of Bank of Ceylon. If I go and get a loan of a normal interest rate, there is no harm on that. Then employment with an audit client, which I explained you at the beginning, because employment with an audit client mean what? So there can be two things. One thing is in our basic diagram. So management, the shareholder and the auditor come and check the finance statement. This audit firm person is working in audit firm. One person is working and getting the future job opportunity at the client place, creating a self-interest threat. That is one. The second situation is, right, one of the audit firm partner has already joined the management as a CFO. One of the audit firm partner has joined as a CFO of the company. Very rarely it could happen. Again, the self-interest is coming up and the intimidation is coming up because so this person knows the too much of knowledge of the audit firm, how they carry out the audit, and that person has some influencing ability, right? So therefore, here it says, if there is a significant connection between the audit firm and this person, so, right, so then no safeguards should be applied that the audit firm must resign. But if there are no significant connection between these people and the audit firm now, you can apply the safeguard and move forward. Read carefully with me. It is possible that the staff might transfer between the audit firm and the client and that negotiations or interviews to facilitate such movement might take place. Both situations are a threat to independency. And audit staff member might be motivated by a desire to impress a future possible employer. I told you, a former audit partner turned finance director has too much knowledge of the audit firm. Audit firm partner becoming the finance director of the company. In general, there may be a familiarity and intimidation threat. Both will come in addition to the self-interest. When a member of the audit team joined an audit client, if a significant connection still remains between the audit firm and the former employee partner, and there may be no safeguard could reduce. Otherwise, safeguard can be applied. What are the safeguards? Modify the audit plan, assigning individuals to the audit team who have sufficient experience, having an independent professional accountant to review. Those are common safeguards. Remember, this safeguard you can write of all the places. This is generally applicable for all the places in the exam. Even if you can't remember the safeguard or if you can't think on a safeguard, you can write this one. Then the next one is partner on client board. This cannot be done. So very strictly cannot be done. That means audit firm partner cannot be a director of the company. That is strictly prohibited. So that means management, shareholder audit example. This audit firm partner is a director of the company. One of the audit firm partner is a director of the company. No safeguard, nothing cannot be done. Partner on client board is not possible at all. A partner or employee of an audit firm should not serve on the board of an audit client. It may be unacceptable for a partner or an employee of the audit firm to perform a role of company secretary and auditor. So you can work as a company secretary, but the board cannot be done. Gift and hospitality. This is a very good one, which we discussed. I told you when you go for the audit of Strangila, you are given that gift, and you are going for audit of Crispo, so audit of we discussed Pizza Hut. The pizza will be given. So watch jewelers, £2 gold item will come. So likewise, we discussed so many examples at the beginning. Can you take or not? Remember that auditor cannot accept. What is that? Auditor cannot accept any gift and hospitality from the client. Auditor cannot accept any gift and hospitality from the client unless otherwise it is clearly insignificant. ඒ කියන්නේ values එකෙන් නැත්නම් ප්‍රමාණාත්මක භාවයෙන් ඊ타ත්ම අඩු නම් අපිට ඒක ගන්න පුළුවන්. මොකද ඒක ලබා දීම හරහා කළමනාකරණයට මොකුත් අපේ හිතේ වෙනස් කරන්න බැරි නිසා ගත්තට කමක් නැහැ කියලා කියනවා. හැබැයි value එක වැඩි නම් you can't take it. So clearly insignificant, read it. Unless the value of the gift and hospitality is clearly insignificant, a firm or a member of a team should not accept. Now let's say at the year end they are sending a calendar is sent or diary is sent. Can you take? That can be taken. That as a clearly insignificant. But Toyota Lanka, when you go for the Toyota Lanka audit and they are happy and you are given a Toyota car, can you take? When you go to the watch jewelers, £2 gold item is given. Can you take? No. When you go to the pizza, at the end of the audit, they are giving the pizza. Can you take? Yes, of course. It was clearly insignificant. And their intention also need to be looked at. For what purpose they are giving this gift? If they are just giving for happy purpose or happiness at the year end, hampers, so that those insignificant value-wise also less, then no issue at all. In the next one, high percentage of fees. So what is meant by high percentage of fees? High percentage of fees mean now from one client. Now let's say there is a one client called John Keels and shareholder and the auditor. Sometime let's say this audit firm total income is, let's say not from this client but from all the client income, let's say 100 million. Audit firms are earning well. Huh? Let's say John Keels holding fee itself 40 million. All other 60 millions are from all other clients, maybe 100 clients. But from the John Keels audit itself, 40 million is received. What will happen now? Audit firm scared that they will lose this John Keels audit. Because why? One of the audit is given a 40 million, 40% revenue of the audit firm. Then whatever the proposal they will tell, we will agree on that. That is a risk factor. When a firm receives a high proportion of its fee income from just one audit client, there is a self-interest or intimidation threat as the firm will be considered about the loss in the client. It depends on operating structure and whether the firm is established or not. Possible safeguard, reducing dependency on the client, external quality control reviews, and consulting a third party. The next one, lowballing, is another interesting one, the lowballing. So lowballing mean what? The lowballing mean, now let's say John Keels holding, their shareholders are searching an audit firm to be appointed. Right? Audit firm given a quotation, KPMG, EY, let's say PwC, BDO, Creston, let's say Jysing and Company, and ATC. Likewise, there are 7-8 audit firms have given their quotation. KPMG has given 5 million, EY given 6 million, PwC given 4 million, BDO given 4 million, Preston given 4 million, Jysing and Company given 3.5 million, ATC and Company given 100,000. audit fee proposal of this, all these audit firms are very high, but one fellow comes and give a very low audit fee, undercutting. Very low audit fee proposal. What will happen? Sometimes certain client will go to that low fee, some certain, not everyone. This is called lowballing. So you are underquoting. What will happen now? What is the impact? What is the repercussion when they put a quotation like that? When you put that, they can't do the work then. Because why these people are putting a higher fee? Whether all these amounts, whether these full amounts are profit for them? No. So cost is there. Because we have to pay the salaries for the chartered accountants and the other managers, executives and all that. The salary cost is there. But this person put 100,000 mean that that person can't do anything. So that means he, without doing anything, he will sign the audit report. So the quality comes down. Self-interest will push to down the quality. So therefore, when the firm quotes a significantly lower fee level from an audit service than would have been charged by predecessor firm, there is a significant self-interest threat. If the firm tender is successful, they should apply the safeguard. There is nowhere mentioned that cannot be done. Nowhere mentioned it cannot be done. It can be done. It can be done. But it can be done. We have to apply the appropriate resources to do it. Right. Then there are another two examples of three examples from the self-review threat. So self-review threat. The self-review threat coming like this. Recent service with an audit plan. Recent service with an audit plan. So that means, now let's say, so management and the shareholder and the auditor, right? CFO of the company is becoming the audit partner. That was possible. Earlier we discussed audit firm people are going to the company. Now we are talking about the company people are coming to the audit firm. Then what will happen? Self-review comes. How that comes? Because self-review means audit firm partner is going to review the work. What work? That is done by himself as a CFO later, previously. Mama විසින් CFO විදිහට කරපු වැඩ ටික තමයි මම check කරන්නේ. Self-review. Individuals who have been a director or officer of the audit plan or an employee in the position of exert direct and significant influence over the preparation of the accounting records or financial statement in the period covered by the audit report should not be assigned to the audit team. Should not be assigned. Then provision for general other service, non-audit services. Generally remember that I told you at the beginning this one, the management and the shareholder and the audit. These audit firms are providing a different type of services. These audit firms are not only providing the audit service, audit firms are providing a two type of services. One is called audit service. Other one we call non-audit service. Right. Under the audit service, there are two we call audit and review. Can you remember we discussed from the very beginning? There are some lot of non-audit services. Example, right? Preparation, bookkeeping. Bookkeeping we provide. Tax service we provide. Internal audit service we provide. Recruitment service we provide. Fixed asset verification service we provide. Likewise, there are a lot of services which are provided, which are provided by the audit firm. Right. So not only audit firm, even though we call our audit firm as auditing name, audit firms are not only doing the auditing, so they are doing a lot of other services as well. Those are called non-audit services. Right. Now the problem is now these non-audit services, whether can these be now same client? The problem is different client you can provide these. Same client, let's say John Keels Holding. Same client, can I provide all these service? There is issue. Because why? Once you provide all these service and the audit service, but the threat arising, self-review comes up. Because you are going to review the work, certain work that you have done. For example, tax service, I explained you previously. Bookkeeping. So you have prepared the finance statement and you are coming and checking the finance statement, bookkeeping. So therefore, providing non-audit services is always creating a self-review threat, and always auditor need to apply the safeguards, right? And mostly you can provide any non-audit services we are provided. You don't take the management responsibility. ඒ කියන්නේ මේ අපිට ඕන assisting වැඩක් කරන්න පුළුවන් වෙලාවට. advice කරන ඒවා කරන්න පුළුවන්. උදව් කරන ඒවා කරන්න පුළුවන්. හැබැයි අපිට ඒකේ වගකීම අරන් කරන්න බෑ. ඒකයි කියන්නේ. You'll read it out. Providing non-assurance services to audit client may create a threat to independence of the firm or members of the audit team. Audit firm must evaluate any threat arising or decline to provide non-audit service if the applicable safeguard will not reduce the threat to an acceptable level. Provision of non-audit services of audit client will not create an insurmountable threat and great risk. Insurmountable means great high. Threat can be provided when certain safeguards are in place. Depending on the nature of the other service, safeguard may not even be necessary. An important question to ask when deciding whether the provision of non-audit services for an audit client is acceptable is, does providing the service result in audit firm carrying out activities that would generally be considered the management responsibility. So therefore, administrative work, routine tasks, all these can be done by the auditor. But when the management responsibility undertaking tasks like tax computation, bookkeeping, all those auditor has to be careful. Third one is preparation of accounting records in the finance statement, which I told you. What is that? Management prepare the finance statement and give it to the shareholder, and the auditor comes in. Yeah, the thing is, management says that the auditor, look here, auditor, I don't have a staff to prepare the finance statement. Can you prepare the finance statement? Bookkeeping. ඔයාලට පුළුවන් ද bookkeeping කරලා audit එකක් කරන්න. Can you all do the bookkeeping and the audit? Answer. If it's a private limited, you can with the safeguard like 2 different teams. Remember that if it is a PLC, you cannot provide it. If it is a public company, you cannot provide the bookkeeping payroll type of services. Remember that, right? To read it out, there is a clearly a significant risk of self-review if a firm prepare the accounting record of and finance statement and then audit them. So this is examinable point. However, in practice, auditors routinely assess management with the preparation of finance statement and give advice about accounting treatment and journal entries. Audit firm must therefore analyze the risk arising and put safeguard in place that risk it to an acceptable level. Remember, if it's a private limited, you can do applying these 3 safeguards. Using staff members other than team members to carry out. Different 2 teams are being used for both the work. Right? Using an independent partner to review common safeguard and obtaining a client approval for the work undertaken. The rules are more stringent when the client is listed for a public interest. A firm must not provide a public interest audit client with accounting. Public interest means PLC. Right, accounting, bookkeeping services, including payroll services, who prepare the finance statement, which the firm will express the opinion. The same rule applies for financial information, which form the basis for opinion. So therefore, remember in a PLCs, if you are the auditor, you cannot prepare the financial statement. Remember that. Again, I'm highlighting what is that? In a PLC audit, if you are the auditor, you can't prepare the financial statement. If it is a private limited, it can be done applying the safeguard like doing a 2 different teams. Clear? All right. Right, we are coming to the last, some specific ethical issues. There are 2 specific ethical issues to be told. One is called conflict of interest. Conflict of interest. So one example for a conflict of interest is KPMG is the auditor of CBL. KPMG is the auditor of Maliban. EY is the auditor of, let's say, Sirasa. EY is the auditor of Derana. You are right. one auditor is becoming an auditor for the two competitive companies. What's happening? What's happening? Both the parties are scared. EY knows all the secret of Sirasa. EY knows all the secret of Derana. These two are very competitive. What will happen? Sirasa people will try to get the information from EY about the Derana. Derana people will try to get the information from the EY on Sirasa about the Sirasa. And this is we call conflict of interest. Gattanevana sambandhata. Conflict of interest. Conflict of interest. Gattanevana sambandhata. So in this type of moment, there is no rule that you can't do, but you have to take the appropriate safeguard. One is that you have to tell both the parties, I'm the auditor of this. I'm the both. And you have to apply on not only one team, you have to apply two teams. Don't put one team. Right? Likewise, safeguard can be applied. That is one of the conflict of interest. And say KPMG, it's a KPMG, is the auditor of let's say John Keel Holding, John Keel Automation, one of the furniture company. KPMG has a subsidiary which they also do the furniture business. They also do the furniture business. Now what happened? KPMG is the auditor of the one another furniture company. KPMG also doing the furniture business. What is happening? Conflict of interest. Right? Both the examples are good for the conflict of interest. Gattanevana sambandha. Right? So give me 1 second. Right. So this is a conflict of interest. We'll read it out. A professional accountant in public practice should take reasonable steps to identify circumstances that could pose a conflict of interest. For example, a threat to objectivity may be created when a professional accountant competes directly with a client or has a joint venture or similar arrangement with a major competitor of a client. A significance of any threat should be evaluated and safeguard applied when necessary to eliminate the threats to reduce them to an acceptable level. Depending upon the circumstances giving rise to conflict, it might be necessary to notify the client, use separate engagement teams, procedures to prevent access to information. You should restrict the access to the information, clear guidance for members, use of confidentiality agreement, regular reviews of the application. Where a conflict of interest creates a threat to one or more of the fundamental principles that cannot be eliminated, engagement cannot be accepted. The final one. Marketing professional services. Now, this is what I told you at the beginning. So the audit firms or auditors can't do the marketing, right? You can't say that I'm the best audit firm, best firm in the world. You cannot say. You cannot criticize another auditor, another chartered accountant, and you can't exaggerately tell about you. You can't, we will do the 10% discounts. You can't do the marketing. So we'll read it out this. When a professional accountant in public practice engage in marketing professional services, there may be a threat to compliance with the fundamental principle. For example, self-interest threat to compliance with the professional behavior is creative services, achievements or products are mistaken, marketed by way that is inconsistent with that principle. The professional accountant in public practice shall be honest and truthful and not makes exaggerate claims or service over. I'm the best. Makes exaggerate claims on that. We are the auditor of 100 top PLCs in the company. You can't tell like that. Make disparaging reference to or unsubstantiated comparison to the work to another. EY is the best than the KPMG. EY is the high quality firm than the PwC. You cannot do like that. So being a professional practice, members practice in chartered accountant, they cannot do the marketing. So they have their marketing ability or a marketing scope has been limited by the code of ethics with this restriction under this one. Right, so that is the end of the code of ethics discussion. So I believe that, so these 3 hours, you got a very good understanding into the code of ethics. I request you to look at this document carefully, and there will be a definite question in your examination as well, because this is one of the easiest area that you can score, right? And there is another something called NOCLA rule, but I'm not going to tell you in here. NOCLA, non-compliance with the laws and regulations. So NOCLA rule. So that is, it's a little bit of an advanced, a little bit of a in detail theory. It will not be discussed here, but if you really want to see, you can look at under the code of ethics booklet, but this will not be tested in your examination. It will not be tested in your exam, but just for your knowledge, if required, you can look at the code of ethics booklet on that, right? NOCLA, right? So now, at the summary, at the outset summary, what we discussed now is like this. What we discuss is this. So being an accountant or an auditor, we have to maintain the professional ethics. This maintaining this professional ethics can be addressed into the 5 steps. The first of all, this accountant should see what are the threats coming up, 5 threats, and to see whether from that 5 threats, what are the fundamental principles getting affected, and to see whether the safeguard. So basically, that means any accountant or any auditor has to see 3 things. What are the fundamental principles that I should maintain? What are the threats that I have to face in my life, professional life, not the personal life? And how can I manage through the safeguard? These are the 3 things that we discussed in the code of ethics. Right? So I believe that you got some good understanding into that. And there is a practicing question. There is a practice question. So this is a bit of an advanced question, but I thought of putting here, but just for you all to practice. But this question: analyze the risk to independent arising in carrying out your audit of BigCo PLC for the year ending 31st December 2021 and suggest safeguard. So I want you to read this question. I want you to read this question and identify the answer in this format, right? Issue, threat, or threats, right? Impact on fundamental principle, safeguards available or not, some available or not. If available, you have to write it. So I want you to write this question in this format, right? In this format. I will be discussing this with you, this question separately, right? I want you to do this question in this format. Issue, identify, there are so many issues here. Issue number 1, 2, 3, 4. What is the threat? You can see from here, self-review or self-interest or whatever. There can be more than one. An impact on the fundamental principle. What is the impact of fundamental principle or principles? And the safeguard. Just note down this answer. So then thereafter, we can discuss the questions. Right, I'll take this question discussion into the separate recording, and so with that we will conclude this session. So now you can write down this question, and I will be discussing this question separately. Right, so thank you. That if you have any questions, so you can put it to the WhatsApp group, or I will be able to answer. Thank you.